All right, recording is live. Let me get on the stage here. Okay, I think we're good. I think. Let me get my camera turned on, get the screen started, all the good stuff, and we'll get rock and rolling. All right, welcome. Can you guys see my screen and hear my face? I think I have those two going at the same time, hopefully. Let me just triple check, make sure I'm not muted. All right, I think we're good to go. If you guys can hear me, go ahead and throw one in the chat. If you can't, I guess throw nothing in the chat, and then I'll know. And I'll try not to take it personal. Oh, all right. How about now? Now, if you guys can hear me, feel free to throw one in the chat. If you can't hear me, don't put anything in the chat, and we'll go from there. What's going on, JWAG? Morning. Oh, you put a 1. Okay. Thank you, sir. Appreciate it. Thank you. Up on the chart here, I got the 5-minute for CWD. Obviously, this one is up insane. Just like yesterday, we had our what was it, 4,000, 5,000% runner, and then it pulled back. It's just a crazy kind of, just a crazy day, crazy week, actually. The whole week is crazy. It's insane. The market is just bonkersville, and we're going to see a lot of these little low float runs just boom, 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 because the volume is going to go somewhere. And when it consolidates and breaks out of, expected ranges, when there's catalysts and low float and high volume, and the volume is directionally proportional, and then it kind of crosses over that tipping point where there's just an excess of volume and an excess of price displacement, and then the price just goes, right? Because that's so much more attractive at that point for most of the algos, and then it just it gets pretty crazy. So that's basically what we're seeing the last 2 days. We're just seeing these little pools of consolidated participation in the market. And basically what happens is, let's say you've got a stock like CWD. What was the catalyst on this guy? It was, I don't think it was anything super good here. There was a purchase. A lot of this is crypto related, so you're just getting a lot of volume here based on that. So yesterday's trade, we had an offering. There was a $250 million private placement, then a $20 million investment from Bitmine. This one here has its own little specific crypto-oriented headline, and the concern here for this one is that they may do an offering. Now they've only got 27 million float. 270,000 restricted shares, which isn't a lot. But a company like this could very easily halt and then put a dilutive catalyst in effect, and then before you know it, there's a split, and then you don't want that. Okay, so company wants to cash out too. So basically, what we've got here is you've got, let's say this is like the baseline. Okay, this is where the price is kind of hanging out around $2, a little over $2. And then you've got some sort of just insane pop catalyst. Maybe the price shoots up to maybe $4 or $5, right? In most cases, you get a couple 100%. And that's a significant move on its own. And then after a certain point, you've just got this insane momentum run just because it's running. And that's kind of what we've been running into. And when that happens, these stocks just go insane. And that's when you get those 4-digit percentage runs. And that's where we need to be very, very careful trading these, because those ranges get super volatile in a very short amount of time. And that's when things get super dangerous. So we had about 10 minutes till market open. And, if we're trading stuff like this, we really just want to get in and out as the price starts to move and before it stops or as it stops. Anything beyond that is super high risk. Okay. So right now, for example, CWD pulling down, red candle, that's not the time to buy, in my opinion, right? Let me also disable that. Okay, so in this case right here, okay, we're seeing a little bit of a buy up here, and this is going to drive people's central nervous system crazy, because they're going to see this. This is a visual trigger, and they're going to want to participate in that because they see, red, and that creates an expectation, right? And then they see a change, and that creates a separate expectation. The brain's just getting bombarded with dopamine at this point, and they want to be part of the buy-up, right? They see wick, 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 and then pop, pop, pop. And they think they know it's going to go. And, oh, hey, Alan Clark, how you going? He wants dopamine too. And, in this case, it may very well happen. And that's the problem, is when you have that and you, quote unquote, buy the dip and you guess, rather than using some sort of mechanical system, you get rewarded for that, and then that becomes a reinforced behavior. So we got to avoid that. And instead, what we can do is we can look for something clean and mechanical and objective. So in this case, if I were to look at this, just this candle range right here, the entire range of this candle here as a breakout, that's a much cleaner entry because at least we're breaking out of the consolidation, the range that this candle before it provided as a structure, right? It's not an efficient way to trade, but it is a nice clean area of structure. And then we can just put a stop loss right here, just inside if we wanted to, or just below the candle that we used for the entry. If we just want like a brain dead, you know, go with the flow, price is moving up, so is my money, that kind of approach. But, you know, this is the kind of approach you kind of have to take with a stock like this, because if you're buying red candles, you know, they can get pretty big pretty quick and you don't want to get stuck in that. Okay. So we'll watch CWD. I don't have a whole lot on my radar this morning because I'd rather trade, you know, look at stuff after market open. This pre-market stuff gets super wonky once you get like a 4-digit runner in there. And this one, you know, because there's fewer halts pre-market, the violence potential on this one in the next like 8 minutes could be pretty insane in either direction. But you've also got a lot of risk here to the downside. You know, this is up 2,000%. It's a $45 stock. Whereas when it closed yesterday, it was like $2. Okay, so it's it's 22.5 times higher than it was when it closed yesterday. And that's insane. Okay, and yesterday it was like 4,000 or 5,000%. The percent turnover on this is 9.76% pre-market, obviously, so you have to be mindful of that. So when market opens, I want to see what that percent turnover is, because that's it's going to get insane. So we'll just kind of watch this. We'll hang out. This is not the time to aggressively jump in and out of stuff, in my opinion, anyway. You know, this price is going relatively sideways anyway, so we can always just kind of hang out and watch and see what else is up and coming. So we've got MMA. That's kind of pulling down a little bit. Not a big fan of this kind of price action. You know, you had this massive pop, and then it's just kind of trickled down, right? There's just no volume on this one. So let's see what else we got. QMMM, right? Big impulse. You got your +1, +2, and then you've got the pullback. Okay, so right now we're dealing with a fib retracement. So if I go ahead and draw that out here, the only area where I'd personally even start to look would be like a retest of $20 to $22. So we can keep an eye on that one as well. JEM, you got your T+2 already, right? You got your 1, 2, 3. So after this one, it's profit taking. Not much we can really do on this one, especially now that it's pulling down, right? Red candle. STEC, this one looks pretty. It's got a shallow pullback so far, and it's starting to pivot to the upside. But again, you've got a series of candles with higher lows, big candles, and then you've got big red candles kind of pointing in the other direction. So this is medium risk. Doesn't mean it's not going to go up. Doesn't mean it's going to go down or up. It just means that we've got defined risk, and we've got an opportunity here with ideally some sort of disproportionate profit potential. But then this is one of many opportunities. Now we got to consider that we're heading into auction cross here in about a minute. And we've got this chop here on the left. So it might get stuck here in the shakeout. It might blast through it. We have no idea. It might turn around right now and just shoot all the way down to $2. Okay. Now, since we're heading into auction cross and stop losses don't work pre-market, we got to be very careful if we enter these kinds of positions. Now, this one here doesn't have any restricted shares, so that's good because that means that they can't drop an offering or anything like that without registering it, right? And I'd have to look and see if they have something, but I don't see any reserve shares. And then it is also a sub-dollar stock that's now up to $3.28 pre-market. You know, yesterday it closed 66 cents, which means that they're subject to the lowest threshold for halts when the market opens. They've got was it 10% in like, I think it's a minute if I remember correctly. So any pop on this one, you know, like this candle right here, 8.65%, that was close. That might have triggered a halt. There's also a volume threshold. I can't remember what it is. It's a percentage. These are hundreds of thousands of shares. These aren't millions of shares, which is good. But when market opens, that can all change in an instant, and you can get a massive surge of volume or just a quick pop, and that could halt that price action and trap all kinds of people, and then it could come all the way down to here. Okay, so market open, this would be one that we'd have to be very, very careful trading. This is STEC. Then we've got DSY. I've just got the dollar levels plotted out on this one. I like this one. I like this one a lot. Now it kind of pulled down quite a bit, but I still like the setup here. It's got a nice curl to the upside. We're breaking over local highs. We've got good volume after 9 o'clock. We've got good volume after 8 o'clock. So each hour, all these brokers are opening and there's resolution, which means that people are participating. So I'm really, really going to keep a close eye on this one. I have 3 shares, I think, on this one. And then I think just kind of all eyes are going to be on CWD for a while. So this one is probably going to halt immediately after open. It's just got that attention, right? Just like yesterday. So with that said, we are now in auction cross. So this is an area where we can watch the order book time and sales, and we can watch for these quick pops and quick drops and all kinds of violence. Now this one here, I wouldn't really consider an abnormal size candle. So I wouldn't be jumping into this one personally. But this is the kind of opportunity where we can start looking for those disproportionate candles. So this one right here, for example, is $7.76. It's a 27% candle. That's a 25% candle. So you've got your 1, 2, and 3 right here. And then you've got, maybe another one here. This guy, it's 4%, which, that counts. So maybe we see 1 or 2 more big candles to the upside. But that's got to happen within 3 minutes because market's about to open. So we're going to be very careful. I do have a sell order on my shares in DSY at $9, by the way. I've got 2 of the 3 shares. I'm going to sell at $9. So now that my rambling's out of the way, how's everybody doing? How's your morning? Make sure if you guys are on social media here, I'm going to put a link on here. I know the market's about to open. I'll put it in here as well. This is a site you can go to. It's not a sales page or anything like that. It's just an email. You just put your email in there and we send you some reminder emails. There are going to be some emails about Lee's coaching program. But again, I only put stuff in front of you that you guys can use. I'm not trying to shove sales down your throat or anything. The most important part of this is getting those reminder emails for his stream on Thursday. Because I know a lot of people tend to roll in late and be like, I forgot it was today. So get those emails. It doesn't matter if you're in lifetime, premium, free, whatever. Those reminder emails are there for you, and we send out the actual link every Wednesday night so that you guys can have the YouTube video itself pulled up, not just the channel. We've got about 2 minutes till market open. What's going on, Capitan? Capitan or Capitan? Capitan? How do you pronounce it? Is it Oz or same? Okay. Or is it Samsam? Same? I don't know. JWag's going to have to help me out. All right, go ahead and put your predictions in the chat if we want to gamble. Do you guys think it's going to go up or down? Put a 1 in the chat if you think CWD is going to blast up. 2 in the chat if you think it's going to blast to the downside at market open. And my prediction is that it's going to halt one direction or the other. So go ahead. We'll just make it fun. So if you think it's going to go up, put a 1 in the chat. If you think it's going to go down, put a 2 in the chat. JWag says 1. Thinks it's going to halt up. Getting a bunch of 1s. Okay. Is anybody holding any shares right now? Put a 3 in the chat if you got shares. This is CWD. Yeah, less than a minute. Is it too late to go in? LV, I'm not touching this one. This is the highest risk opportunity of the week so far. There's zero reason to jump in right now because we're on the threshold of the market open. It's a super low float stock. They have restricted shares, and it's more than likely going to halt at market open. There's going to be so much participation on this thing. I don't want to get caught in a chain halt to the downside. So it's up to you. I mean, if you feel like that risk is worth it, you can, but I personally don't. I'm not touching that. So instead, we're just going to watch it and see what it does. And I think a lot of this volume should cascade also down to DSY and STEC and or a third competitor that might roll up on the chain after the market opens. So I switch this over to the 1 day. We see Octo here was at the top of the list. Market is open right now. $100. No, I'm good. I don't like this one. All right, so we got a bunch of 1s. We got 2 people that said 2 in the chat, and Paul C said 3, which means he has shares. Paul, do you have a plan for those shares, just in case? Also, let me. Okay. Your mistake. You're holding DSY. Okay. All right. No worries. I got a couple shares myself, or a few shares, I guess, 3. That one's super volatile pre-market, so we got to be careful with that one as well. So it looks like we're getting a wick so far. We get a little bit of a buy up, and let's see if we get a halt. There are trying to see if this is going to update the volume. It's so far it's 756,000 shares, but we know that it's continuing to move. So 903,000 shares. Looks like it really wants to hang out right back at that open price. So we'll see where it goes. All right. So it looks like we got a red candle at open. That's potentially bad, right? So we'll see how it goes. And yeah, a lot of these are probably going to pull back. That's usually what happens at market open. A lot of the fair value kids are going to jump in, and they're going to be looking at this guy. They're going to be looking at this guy right there. We got 2 zones for potential support, but again, those aren't buy zones. Those are zones to watch for potential reversal. And a lot of people just blindly buy in when they see a fair value gap. That's not how you trade those. Just like a fib, right? You don't just blindly buy because something hit the 61.8. You watch it. It's a measuring tool. DSY falling. Yeah, it's going to be a volatile one. This one is halting, and you got all these big red candles over here. You got big red here, here, and here. It just needs the volume to come back in. I think once the volume does, it bounces back up just as much. So it's just a wide one. So I'm not too worried about that one. Then I'm going to continue to hold mine, but it is higher risk. So if you don't have a higher risk tolerance, stuff like that can be painful because you can see it, 20, 30%, and you don't need to take those risks. So don't do that to yourself, especially if you're new. It's not worth the stress. All right. So it looks like JEM is kind of touching its little support here, and it's not really getting any volume yet. This is a 60-cent stock. It does have a good setup on the order book, but there's just not a lot of action on this one. So I think a lot of these little stocks are going to wait for CW to halt. What's up, Maverick? How you doing? Wolf is falling. What up with Wolf? I don't even think I looked at that one today. We like it, but it's got some range to it, right? So I don't trade this one myself very much. We've got our levels all plotted out and everything, but I ran into rejection zone above 218. That's kind of an area that's been hit multiple times, and it just likes these lower ranges for now. So we just we get what we get. What about Yule? I like it. Why don't you tell me what you like? Because it's halted. So I can't really use that. It's got a 1.5 million candle on the 1 minute with a 16% price move. And then prior to that, I had just under 700,000 with a 9.5% move. So good increasing volume. Do they have a catalyst? What's the, looks like earnings. Okay. Yeah, it looks like just the earnings. And then some sort of joint venture that I didn't really look into, over a week and a half ago. So maybe, right? It's got a lot of dilution, a lot of restricted shares. So I'd be careful with that one. And a lot of ones that are heavily diluted like that, you can see that they run and then they sell off immediately. So stocks like that automatically tells me that's one that I trade with brackets and things like that, so that it doesn't pull back and destroy me if I do get in. So I can't really use that today. STEC, again, just kind of hit rejection there and it fell off. Nothing we can really do about that one. DSY halted again to the downside, and that one's just got so much violence to it. So if we come up here to the 5 minute, you can see it's got these big moves up, big moves down, big moves up, big moves down. Overall, it's moving down. And then we started getting a higher high here. And, basically this whole candle here is going to act as support. And this whole wick right here is going to act as resistance. So it's going to it has a lot of potential to just be violent down here. And that's why I plotted out each of these dollar ranges on this one. It's got the violence. There we go. So it looks like CWD halted to the downside. So everyone who put a 2 in the chat was validated. But again, that's the risk with these 4-digit runners pre-market. Let's see, we got applied digital here. I like this one in general. I like it for swing personally. I don't really like this one for day trades as much. You can see almost every day for the last week, you know, big red, big red, big red, big red, big red, big red. And no surprise here, we're getting more big red so far, right? You do have a bigger green yesterday, or bullish, I guess. And then the last time you had that was the end of August. So, maybe a shift in trend, but you know, in the 1 hour at least, I don't like this one right here personally. But maybe if we get a higher low and then we get a nice little push to the upside, that'd be all right. I don't see any major divergence here unless I expand and ignore this low. Then yeah, we've got, you know, that guy and that guy. So it's kind of at a crossroads, but it's got to confirm is what I'm trying to get at. So maybe, but it's currently forming a big red candle. SRFM. Why don't you guys tell me what you like about these when you put them in the chat? Because there are millions of, I'm just kidding, there's tens of thousands of tickers, not millions, but there's a lot of tickers out there. This one doesn't have any volume. That's not moving at all. Are you looking for a swing on this one? I don't really like this chart too much. See, the candle ranges here are very narrow. Like that's one, it's like 1 to 3% per candle. That's not very shiny, you know. The ERI, Mr. Top. Mr. Top. Let's grab that 5 minute. I like that one. Kind of wish this one had more volume, but I know how your style is, and you always get in before the volume surges in. So interesting. They do have quite a bit of restricted shares on this one, so word of caution on that one. But I love this big candle here. Not a big fan of this little dip in volume here, but again, if that volume can stabilize and come back in, that's, you know, you crush this stuff every day. So I do like the potential on this one. What is your what do you have levels on this one? Are you waiting for a pullback? Palantir, Alex invested in it. Volume, bullish engulfing in the 20 MA, broke the high pre-market. Need now 320 to break. Yeah, I could see that. So basically what he's, if you're a newer trader, what he's basically pointing at here is that this 295 3 level was broken, and there was a strong push away from the 20 period moving average here on this 2 minute time frame. So that just indicates strength, and he's got some confluence there with a structure break, and that's he's just going with the flow on that one. So good stuff. I like it. Looks like CWD is still halted. Looks like DSY is still halted. Let's see if STEC is still halted. So all these top guys are just halted right now. So that kind of leaves the next best thing here, and that's where we get some volume on these secondaries, right? The bench warmer stocks. ULY? I thought you were saying the other one was ugly. Urgently. What do you see on this one? Are you looking for a swing? I don't like this one. Is this more based on fundamentals and catalyst, or you like the tech? Okay, well, that makes more sense. I don't like the chart. The chart looks like garbage, but for a growth stock, yeah, maybe, if the fundamentals are there. I don't like this chart, though. This is just non-stop downtrend, and they've got a reverse split 1 for 12 back in March. So I'd have to look a little bit further into that one. But, you know, when that happens, we can always look for the volume, right? When the volume surges in, just like with, it was the ticker on that, Very, BERI. You know, when the volume surges in on those things, that's when we get moves like this. So good opportunities all around. Now this one's starting to show a wick, which is okay, right? Because a wick doesn't just represent rejection. A wick represents a push into new territory. And then it just happens to get rejected. So at one point, this was a giant candle. And that's where I think people tend to have a bias when it comes to wicks. And that's not always a good thing, because wicks can easily be broken. And then when they get broken, you tend to get stronger moves because of all that reversal in sentiment. All right, so it looks like CWD is unhalted. Let's see if it halts again. We'll just get a series of chains. We're in the fair value gap right now, so a lot of the algos are going to be trying to exploit that. So we'll take a look at that. CRWV, red, but I believe in the company. It's better than NBIS. Yeah. We like CoreWeave. It's usually good around earnings time, in my opinion. Like I like the volume catalysts on it. It's kind of new also. It just came out in March on the market. This one's kind of a tough one, right? Like it's good now, but is it high, right? So in my opinion, if I were to trade this one, I would probably be just looking for something with a super tight stop. I'd probably go down to like maybe the 15-minute, and I would just trade, bounces off the moving average or VWAP bounces or something like that. I probably wouldn't be buying and holding it for long term until it breaks over, like like what is this, 105 or something like that, 106. A safer entry would be above 110, in my opinion, and then a stop like right below that, because that's the kind of stuff that it's untested, right? It IPO'd down here around 40 or just below 40, and it's 2.5 times that within 6 months. So it's good, right? It's got good potential because it can demonstrate growth in the short term, but we don't know how well it maintains. And immediately after a huge surge in growth, we got a retrace that came down and I don't know, is that deeper than half? Yeah, it came down just below the 61.8, which is fine. I mean, that's kind of voodoo, right? But it's an untested, like this support here is untested. So it'd be very difficult for me to justify buying and holding something like this long term. So what's up, Adrian? You're not trading these days, but go Gem. Where's Gem at right now? Is it still pushing? Yeah, it's pulling back a little bit. How's VERI doing? Oh, look at it go. See? So there's that wick. It broke and it pushed all the way up to 329. And that's where I think, again, a lot of people just have a bias about wicks. And think about it. How many times do you see a wick to the downside, right? Let's just draw this out because this is something I think most people kind of need to see. And it's not going to be a fun conversation. But it's worth having, right? How many times do we see a wick like this to the downside, right? And it's a buy up, right? So the price pushed down, pushed back up, and then we get in, okay? And then we say, okay, I'm gonna have my stop loss here, and I'm buying the dip, right? And there'll be a downtrend coming into this, And then how many times does this wick actually get broken? The answer is pretty frequently, right? And it's not that the buy up wasn't strong enough. It's that the overall trend was just too strong to the downside. And this was just a little relief pullback. So in this case, when we see a downtrend going into a wick, it's not always a reversal. The price doesn't always go up like this just because we see a wick. Sometimes it goes down. Oops. Sorry about that. If anyone fell out of their chair. Sometimes it just goes lower. And that's usually what we see with an uptrend like this. You get a wick to the upside. It's not always a rejection or reversal. Sometimes they just get broken over because this wick also represents strength, and that's where that bias kind of gets in the way for a lot of traders. And that's, it's a good example of how destructive a bias can be in the market. And a lot of people just overlook it because it's, they don't draw the correlation between the two. It's like, oh, my wicks always get stopped out, when I'm trying to do these reversals, but I'm also panicking every time I see a wick to the upside because I think it's going to reverse right there. So people like that tend to just ignore the data, and that bites them in the butt sometimes. So any more potential buys as of right now? Yeah, so right now everything's kind of run, and then a lot of stuff is pulling back. So the top runners are tending to halt, or they're bouncing like this. Like I got to draw another line down here at 4. This one's kind of breaking out of the range there a little bit. So this one specifically is expected to have a lot of violence, a lot of volatility. So I'm not too worried about that one. CWD, we kind of expected to pull back, right? At least into a retrace. STEC is halted. Like it's just a morning where there's a big traffic jam. There's all this volume trying to get in, and the candidates here can't support all that volume. These are very narrow highways because they're low float in a lot of cases. So the volume that does come in is disproportionately overweighing the ask because they're trying to get fills. And give me 1 second, guys. Hang on just a minute. Give me just 1 second. All right, sorry about that, guys. Had a little bit of an interruption there. So let me draw this out real quick because let me erase all these lines here, and I'll just kind of walk you guys through what happens on a morning like this. Okay, so all right, so this is the ask, this is the bid. I'll try to make them somewhat equal. All right, think of this like a bucket. All right, and the mid price is right here. Okay, this is the current price that we see. This is where it says 273, 274. That's the mid price. So what happens when you get all this volume that just slams into the market? Think about like two doors going into a building, right? You're only able to fit so many people in at a time, and they have to go through one of these doors, right? So if there's people coming into the building and leaving the building at the same time, you know, a lot of times what happens is they both try to slam in on one side. And that's when, you know, like order matches, right? Every order has to have a buyer and seller, and they have to match in size. But in terms of the market, imagine that like people coming and going from a building, you're just going to have a clogged doorway. So what they do instead is they smash a window, right? And they get filled and they start running through the window. And those are those external fills above the ask or below the bid. And that just skews this price so much higher, so much faster. And all that does is it becomes the new ask when that mid price moves up, because those orders just flood over and over and over again. And that's what drives the price up. And when you get these high volume days, well, not really high volume, but high congestion days, you're going to have messy traffic like that. And there's people just slamming into each other on the way in and out. And that's where, you know, oh, wow, look at that. ULY, beautiful push. And that's the less than 10% candle, right? And it's on, let's see here, 6,000 volume, right? So again, it's a low float stock, but 6,000 shares shouldn't have halted a 1 million float stock. You know, it's just one of those days where you see how these are brightly colored here. This means they were filled outside the bid and the ask. And what happened here is the price popped up so fast, the bids were filled on the orders are filled on the bid side as a gap. Those are all gap fills. And what that means is that the price pushed up so freaking fast that it created this little gap down here for the orders to match, because initially they were so disproportionately filled on the ask side, it was dragging this price up, and it left like a little power vacuum down here. And that's when you see stuff like this happening. And that's when price really just ramps up too fast. And then you run into stuff like halts. Does that make sense? So right now we're not really seeing good volume today. We're just seeing traffic jams left and right. And that's when, you know, a lot of people get hurt. So we're going to see some pileups on the side of the highway. We're going to see, you know, some car fires and things like that. It's not fun. Oh, let me move this. I got to send this to the right side. So when you ask if there's opportunities or potential buys, the answer is yes, but the quality is going to be diminished on a day like today because you don't have good, strong directional volume across the board. You've got little pockets of concentration that are super concentrated, and that is just going to cause disruption, and it's going to halt things. And then the volume has to go somewhere else, right? Because people want to get in, they want to participate. Think of them like piranhas, right? Once one piece of meat is gone, they just immediately chase the next, and then they go to the next, and the next, and the next. And that's where people get, you know, trapped and things like that. And that's not fun. So I'm going to go balls to the wall and say today is a super high risk day. All right. And you can see even gem right here. This was a 15.6% candle on 2 million shares. Where did my, gotta move this down here. Free float is 6 million shares. So a third of the float, you know, where's my percent turnover? Less than 700% turnover on this one, and it halted. Okay. And then you go over here to something like this, and this has got a 3,200% turnover, and it's halted, what, twice? I think 2 times already. You know, that's insane. That's the kind of market we're dealing with today. And that's why it's not a good idea to just jump into stuff. You know, you can still get little scalps, but I personally would, like something like this, I would just jump in and just use a bracket immediately, a super tight stop loss. And then your biggest obstacle on a day like today is going to be fighting opportunity cost and the stress that comes with that. And that just means that if you, let's say you buy right here. This is YOUL. I'm not saying to this. I'm just using this as a demonstration. If you were to buy right here and you were to set a stop loss right here and it were to hit the stop loss, okay, instead of just pushing up like it just dipped in there and then just pushed straight up so far, a lot of people would become frustrated and stressed if they did hit their stop loss, because the opportunity cost would be increased, because they would no longer be able to use that money that they just took a super small stop on. If it stopped, I believe it was like right above it, but I'd have to watch the recording to confirm that. But let's just assume that it did hit the stop loss, because the spread here is a couple cents. They would be upset or stressed because they wouldn't be able to use that money for the next trade and the next trade and the next trade. And that is opportunity cost. And that's not something that we tend to process very well as humans, because we like to make the most of every opportunity. So, in this case, it would have gone up and all that, and that's all fine and good, but we wouldn't be in it very long. If we look at something like ITP, we've got a bunch of wicks to the downside. These candles are mixed. You've got big red candles. You got 1, 2, 3, 4 big red candles, and then maybe 2 smaller ones. Then you've got 1, 2, 3, 4, and maybe 1 smaller one on the bullish side. This is mixed volume on the 2-minute time frame, so I'd have to move up in time frame to see where the overall trend wants to go. And just looking at this, it's just sideways. There's nothing we can really do in this range if we want to trade. So on a day like today, that money's going to burn a hole in our pockets, or we're going to burn it in the market. So I personally would probably just kind of be hands off for a little while, and just kind of see when things turn around, where they head. You've got opportunities like this, which is great. On CWD, this filled the fair value gap, so I'm just erasing them. Now you've got another set down here. Let's see, we got this guy. But, part of successful trading is just knowing when not to jump into everything. And being able to read the volume in the market is super important. Because if you don't recognize that about today, and you just go throwing your money into everything you see, you're probably going to get caught in these halts. And if we look at like GEM, for example, the fact that the price was up here at 96 cents, or what's the high on this one, 88.7, everyone from here to here is now trapped. Right? So if this opens and remains below, 81 cents, all these people here, this there's a 6.8 million shares, are stuck. They're forced to take a loss, so they're forced to hold it, and that's not fun. And this has potential to come all the way down to like 30, 40 cents. So yes, it was going with strength to the upside. It was pushing. You had your 3, and this is why I don't like to hold past those 2, right? We get our big candle and then +1, +2, and that's it. That's why I like to take profit immediately after that second candle. With my Weeble. Okay, so I see. Okay, so they're moving again. So that might have been on my end. Sorry about that. Can you guys hear me now? Okay, thank you. Did you guys hear my walkthrough about those 6.8 million shares? Or was I frozen? Sorry about that. Choppy. Okay. You didn't hear. Okay. Basically, I was just saying that the volume, if you guys can hear me okay, I was just saying that the volume is so inconsistent and scary on a day like today because of those traffic jams. I was saying that anybody that bought, in this entire candle range right here before this halted to the downside, and I looked at the volume, I said 4.8 plus 2.2 is 6 million shares. All 6 million shares up here, when this unhalted to the downside, they're all trapped. They're forced to take a loss or they're forced to hold. And that's, even though the price was moving up with strength, you get these 3 large candles, it's still halted to the downside on the way back in a split second. And I also pointed out that this is why I take that profit after that, big candle +1, +2, and that's when I take those profits. And this is exactly why, because you can't trust those. And then at the time, these were all looking like they were halted. STEC's halted. CWD is just kind of chilling to the downside. The volume's not good, right? So yes, there are opportunities, but I was saying that if we look at like YOUL, I don't know if you guys saw this part. I was saying that as the price was pushing here, the only thing that's kind of safe on a day like today is to have a stop loss immediately there. So if we look at HMMM, for example, that's not working. Was it HMMF or R? No, that's OTC. I don't see that ticker, sir. So yeah, I mean, there are opportunities on a day like today, but they're almost always going to be intra-candle. Like within the same candle, you're going to be taking your profits. Like this candle here is 14%. We're only really looking for like 5 or 6% on stuff like this. If you try to buy and hold for those massive runs, you're probably just going to get destroyed by the market, and it's not going to feel good because a lot of these are just pulling down. And that's kind of an important concept too. I'll talk about that really quick. So if you see these massive runners pre-market, triple, quadruple digits percentage wise, and market opens and the volume is inconsistent like that, or if there's a bunch of halts and something's disrupting the mechanisms for that volume to flow freely, most of the time they're gonna fall off, and that doesn't end well for a lot of traders. So let's see here, YOUL. These are just mixed bags, like you guys see how violently this is moving. That's almost an 18% candle. This is probably going to halt, within a minute or so, if that, maybe seconds. Yeah, today, in my opinion, it's kind of a stay back day. It's there's nothing wrong with just sitting on cash and waiting for better conditions. Like right now we're trying to play golf during a lightning storm, so maybe don't grab all the metal clubs and stand out in the middle of the field. So, and a day like this, if you want to trade, brackets help tremendously because they do a lot of the fast work for you. Wearing steel shows, holding the umbrella, flying a kite, pockets full of batteries or whatever. That 4,000%, I'm still thinking about it. That's life-changing money. So there, okay, let me ask you a couple questions. A, do you think you would be able to hold the entire 4,000%? Just a quick yes or no. Never, right? So the 4,000% number doesn't actually mean anything. It's just another opportunity where you could have made some money. Okay. MMA. Okay. Yeah, that one is, that's the one I thought you might have been referring to. I couldn't see HMMM. But second question, right? Since you wouldn't have held the entire 4,000%, how much money would you have been putting in where that would be life-changing? Because anytime I hear life-changing, that means that someone is doing something that has potential to change their life in both directions, right? Are you financially secure outside the market? Are you do you have a 6-month emergency fund saved up? Do you have regular contributions to a retirement or high yield savings account? Do you have diversified streams of revenue? Is your credit score either on track or built already, where you've got a 760 plus credit score? That's something you can build for free. Don't let the lies get in the way. Do you have a portfolio structure that makes sense? Meaning, do you put most of your money into passive income? Do you put some of it into speculation? Or are you just dumping it all into speculation, hoping you make it, right? So these are the approaches that people take to the market that end up hurting them. And that's why having like a coach can help with that, because if you're putting most of your money into speculation and you're also not able to demonstrate consistent net profitability over several months, you're going to hurt yourself, and you're just going to hurt yourself more than you have to. So I'll put the link in the, I'm not talking specifically to you. I want everybody to have access to a coach. This is not a sales pitch. It's just something that I think most new traders could use. But that is Lee's coaching program. He teaches, stable swing trades. He teaches the the due diligence part of it. Sorry, I've been in court a lot. The due diligence part of it, building an actual portfolio, building a trading plan, and then the skills to follow it. So if that's something you don't currently have, it's worth considering that, especially if you're going to lose, $40 in the next month or so. You may as well get some value out of that. I love this move top. Good stuff. I hope that doesn't halt on you. That's a 10% candle right there. And yeah, I mean, I want everyone to take a step back and consider the approach that they're taking to the market and whether or not it's actually working. Is it working on paper? Do the numbers, the objective evidence, does that confirm your theory that you know what you're doing and that you're able to achieve a net positive result over time? Or do you need to focus on some of the inefficiencies and, restructure things if you're not financially secure outside the market so that there's less pressure inside the market? I get on here Monday through Friday effectively. I know sometimes Wednesday and Thursday I don't actually live stream, but I try to share all my trades here with you guys, whether it's on free, premium, or lifetime or wherever. I always try to share it somewhere. And that kind of, because I'm sharing it, because I'm having to monitor and update stuff, that forces me to look at the market throughout the day more than I ever would if I was just a viewer or a new trader on the side. Because again, the market just plays a very tiny role in your life. And I'm only rambling about this because you use the words life-changing. So I'm sorry, but you did that to yourself. The market should sit in a little box on the floor next to your desk. And then in the morning or whenever you feel like you can trade or whatever your schedule dictates, this one halted again. That's when we open that box. We take it out, we set it on the desk, we pull the market out for a couple of minutes. We use it efficiently for an either small loss result or a disproportionately larger profitable result. And then we put it back in the box. We close the box, we put it back on the floor, and we live our life, right? We go spend time with loved ones. We focus on doing work. We focus on developing our skills as humans and increasing our human capital so we can become more efficient in the way that we handle relationships, our finances. Every aspect of our life can just improve if we have extra time. And that time can be freed up by not staring at charts for 4 to 6 hours a day, trying to change your life, right? It's I always say this, and I know I'm rambling a lot, so I'm sorry, not sorry, but this is a life skill. It's a lifelong skill that will change your life. In which direction and by how much you allow, that's your choice, right? Not everyone has the ability to make that choice easily, but it is a choice at the end of the day. And if you make this a lifestyle, it will become a lifestyle, and that is not good, right? This should be a side hustle that impacts your life, not a lifestyle that forces you to go out and get side hustles. Does that make sense? And again, I know I'm rambling. I know a lot of you guys are in lifetime with me. But this is my one chance a week to reach as many new faces and new ears as I can. And I want to put the important stuff out there in front of you guys more aggressively, because this is the stuff people need to hear as new traders. Top elect 75%. That's insane. Oh, that's on the other trade at 1880. Good stuff, man. Top's a hustle. I love it. So that one you got in above 1570. That was HMMM. And you got out at 850. You sold 75% at 1880. That's good stuff, man. And then, of course, you got an MMA. That's good stuff, man. Congrats. So does all that rambly lecture stuff make sense? Like, I want to make sure that A, everyone's financially secure outside the market. B, you guys are set up, right, to get the right mindset into place, and C, that you're taking the right approach to the market, and not using it as a slot machine. Because if you use it as a slot machine, it has an arm. You're going to pull that arm. It's going to pull your arm. Your arm's going to break a lot sooner. So just be careful is all. Top, I think this one might be getting pretty close to a halt in there, buddy. Be careful on that one. I love the move, though. So if we kick it out to like the 10-minute, that's a 49% move, basically, on that one candle. He's looking for 314. Okay. No reason you can't see that. I mean, it's only another 7 cents from that high. It's definitely moving into that $3 level pretty aggressively. Let me just plot that out so everyone can see it. All right, it's already popped over it. It just needs to hold over $3, and then you can very easily see a bigger move. Yeah, top finds the good ones right before that volume floods in. I love it. He's usually on the 2 minute though, not the 1 minute. But I like it. With that said, though, I do have to jump off here pretty soon. Let me sorry, I'm just trying to see if there's anything else really worth honing in on. I don't see much in the market this morning that's quote unquote safer, right? And I do have to get on this call here pretty soon. Let me put this link in the chat again. And again, it's not just for free people, right? Ideally, everyone who's on the free side signs up for it, but mostly it's just to get that reminder email so that you have that specific link for Lee's live stream on Thursday. Yeah, I think you'll like it. Does anybody have any questions before I jump off of here? If you do, go ahead and put a 1 in the chat just so I know to hang out. Otherwise, I will I'll have to jump off here, and then we will catch up on the earnings stream later. And we've also got a couple other streams today. If you guys are on the free side, you won't know it. If you're in premium, you guys get the PBU live. Duck is bringing that back. That's at 1 o'clock Eastern today. Bull spread trading at 3 Eastern. If anyone's trading options or has more than $500, spreads are a great way to make capped risk profits, which I love. I love anything that minimizes risk. It's my favorite. You guys know that. And the only obstacle you have there is dealing with capped profits as well, which again, you wouldn't walk past $20 on the sidewalk, or $50 or $100, whatever. But for some reason, our brains just weigh things differently when it's capped risk versus capped profit. So capped risk is always more important. Then at 5 o'clock today Eastern, we've got the Trading Psychology group session and book club. That's probably one of the most important streams this week. That's where Nikki, our psychology major, goes through readings, books, and by other successful traders and breaks down the concepts one by one. So make sure you guys are in on that. Otherwise, I'll see you guys at the earnings stream. That's at 4 o'clock Eastern, so right at market close. And then if you're not on any of those streams, if you're not in premium, you're not in the on the psychology stream later or the earnings stream, those two are free. Then I will see you guys tomorrow morning. Lee's going to live trade the market open in premium, and then he's going to do it again on Thursday. So make sure you guys sign up for that email link, and we'll get you that link. Yeah. So let me end the recording and the live stream. I'll hang out with you guys here in the Discord for a second.